Um, okay, so in this video we are going to show how to use our scanner to choose options with unusual volume activity. Um, so for doing this, we will go to strategy and choose naked call. Let's just run quick search. So this is just a default search of options, of call options that we can buy. Um, let's now edit our filters a little bit. So let's have a look. So we are buying calls, 10 quantity. Let's sort our results by risk reward and let's show the maximum 200 options in the result. Now let's go to the stocks filter. Let's start with the all US, cover it so you can limit your coverage and choose maybe 200 stocks by option volume only, or you can enter your own custom stock list. As long as we are buying calls, we are interested in stocks with the bullish price trend. So let's leave those default filter bullish and volatility filter. Well, we can choose either volatile stocks or quiet behavior, but for buying we probably don't know what would be the best choice, so I would leave the default any behavior with regard to volatility. As long as we are buying options, we would like to buy cheap options, and cheapness is defined by the implied volatility index level. So it suggests a cheap choice by default, which is good, and we additionally can choose whether it's cheap based on the 1-year range values or relative to historical volatility, or maybe cheap just by absolute value. In this case, if volatility is below 20, it's supposed to be cheap. But let's leave the first choice 1-year range. And also we activated an additional filter price for stocks. We probably don't want to buy stocks under $5. Let's now go to options filter and let's choose for any expirations. Let's leave moneyness filter, add the money by default, and we enabled additionally two filters, the implied volatility filters and volume filters as a percentage of open interest. We would like to buy cheap options, so we set implied vol no more than 40. And with regard to volume, let's put 100%. What means that we are looking for options whose volume during the trading day exceeds the total open interest of the options. Let's have a look if such options generally exist. Just let's click search button. Okay, so we have a list of options that scanners suggest us to trade where options volume exceeds the total open interest of the option. So let's have a look. Let's open the first options and have a look. Okay, so this options has 2600 volume while its open interest is just 850. So it's definitely a very interesting option to trade. Let's have another look. This is 15 volts, which is quite low. So generally it doesn't look expensive, it's slightly out of the money, which is good. So it just cost us 6 cents. So I probably would choose this option. I click copy to pocket and I will have a look at it later. Now let's click another one. Okay, so it's volume the 7 and end of the day volume is 3 and open interest is 3. Okay, it's too small. It's too small. We don't want to have a look at it further. So let's look at another one. Okay, option volume is 300. Total open interest of this option is 120. It's too small again. Okay, so let's just go next. Let's look at the Walmart. Wow, we have 5,000 option volume, which is almost 1.5 higher than the total end of the day open interest and 5 times more than the closing option volume. So we definitely want to have this look at this option later. So we are copying it to pocket and we'll get back to it later. So let's have a look at the couple more options. Okay, this one probably we can miss it as well. Let's look at IBM. It's small as well. Okay, Procter & Gamble. Okay, we have option volume 1030, while yesterday there was no interest at all and the open interest is just about 40. So yeah, we definitely want to have a look at this option as well. Let's copy it to pocket. Okay, so we have chosen just 3 options that we would like to analyze in detail. So let's go to our pocket and have a look what we have. So let's go again to the Walmart and have a more detailed look. So this is the stock price for Walmart. This is our capital required. This is our to standard risk, which is basically what we pay for this option. That's the maximum risk we have over here. So this is our ask price. We would buy these options for 0.73. So multiplied with 10 contracts and 100 shares, that would be $730 in total. Well, which is acceptable probably. But if our price moves towards and increases by 2 standard deviation, yeah, our profit would be about $7,600, which is good. So what can we do? We can quickly check what happens with our profit and loss if time changes and if price changes. So as we see, if price goes down, we are limited to $730. That's basically what we paid for this option. That's maximum we can lose. If price goes up, that's good for us. So this option is definitely a good candidate to trade if you are looking for an unusual option. It has very high volume, relatively cheap price, small implied vol, and it's a little bit out of the money, and we have almost 2 months and a half until option expiration. So this is just an example how we can choose the unusual option volume. Okay, so I think that's the end of the story.